I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends, just trying to save you some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. Today's decline came down to 4 words, a few months early. That phrase, spoken by Federal Reserve Chief Jay Powell, explaining why he might favor ending the Fed's bond buying program sooner rather than later, sent the market into just an abrupt and miserable tailspin that people are going home feeling very bad about. It's why the Dow plunged 652 points, S&P plummeted 1.90%, Nasdaq tumbled 1.55%. Could have been worse there. Powell's comments about winding down a program that's helped keep the economy going, they were unexpected. They were jarring. The Fed's bond buying program has made it cheaper for companies to borrow money, which helps propel the economy. Also unexpected, Powell's decision to call inflation more persistent and less transitory, which marks a break with his previous thinking. In the past, he very much believed that inflation would simmer down once we worked out our supply bottlenecks. He always told us that was transitory. Now he wants to retire the word transitory entirely. Powell's feeling like the oven has gotten just too hot, and we may be burning the turkey. So why keep turning up the heat with more bond purchases? Why not close out the program sooner rather than later? All right, now listen. If Powell had made these statements, let's say a week ago, before Omicron, I think the market probably would have taken it in stride. It's common sense. But we got pulverized today because the timing was so bad. We were already freaked out about the Omicron invasion. So the comments seemed a little tone deaf. But does an early end to the Fed's bond buying program mean the bull is a dead bovine walking? Look, the bull's obviously suffering, or else we wouldn't get this crushing sell-off. If you own stocks, Jay Powell did pick indeed a lousy moment to get religion on inflation. Wall Street doesn't want to hear about an accelerated taper while we're waiting for the other shoe to drop with the Omicron variant. However, as Powell pointed out, the economy is definitely stronger. You and I know that. And it's stronger than it was, and we're likely going to get a pretty good unemployment number, okay, this Friday. So he wanted to lay out what he thinks the Fed should do if Omicron doesn't wreck the economy. If this new strain really doesn't burn us, believe me, Powell can just change. He said he'll say there's no reason to accelerate. He can walk back his comments like he did 3 years ago when he got too aggressive about tightening and the market rolled over. In the immortal words of Joey Brown, and some like it hot, nobody's perfect. Now, to some degree, all this is inside baseball. What the heck does it mean to you, regular investors, if Powell now thinks inflation is more persistent and the bond buying program needs to wind down ahead of schedule? Honestly, not much. In fact, I think after this maelstrom of selling, it's become a reason to buy. I'm not going to tell you to sell. Let me explain. Consider the average investor who these days invests for the most part with long-term index funds. That's the kind of person who should be looking for a price break to put money to work rather than wait till the end of the year and maybe stocks have gone too high. Powell's comments are not a reason for the typical index fund buyer to run from the market or sell. And if you are selling here, you're freaking out about the inevitable. Didn't we all know that the Fed would start to hit the brakes once the economy got hot enough? One day. That's what always happens, even if Powell's being more measured about it this time. Today, he simply stated the obvious. He just did it a few months early. You had to expect the Fed would tighten someday, and you had to know the market would get hit whenever that happened. Plus, while Omicron may slow down the economy, it's also bad news on the inflation front because a new strain means more people missing work, creating more supply bottlenecks that lead to higher prices. See, before the Delta variant, we actually thought COVID flare-ups would merely damage the economy, but they also damage the supply chain, which does cause more inflation. And that makes it harder for Powell to ignore inflation. We just didn't know when he'd make these comments. Considering we had one of the best days of the year for NASDAQ yesterday, I can understand why he felt emboldened. I mean, why the hell not? Although I wish he'd waited another couple of weeks, but again, nobody's perfect. Still, Jay's doing what's right. With this much job creation, not enough people to fill the jobs. You and I know the one as you look at every single shop front, right? We got shortages galore here, and they're being used to jack up the prices. So he had to bite the bullet. He's not oblivious. He's not obtuse. Now, last night I told you that if you wanted to buy stocks, you had to wait until we get our first confirmed Omicron hospitalization here in the U.S. But for your average index fund investor who's trying to figure out whether it's a good time to buy, put more money to work in the S&P, well, they just got a clarion call to pull the trigger on at least some of that cash right now, even ahead of the hospitalization, lest we find out that Omicron isn't as horrible as we think. The call? At one point today, we had 9-to-1 selling to buying. 9-1. Keep those numbers in mind. That is a hallowed ratio where the late Mark Haynes, a legendary CNBC anchor and a good friend of mine, would always tell you that you had to do some buying. You had to hold your nose, he would say, buy, and do some buying. That's how he called the clairvoyant Haynes bottom when the selling got too excessive in March of 2009. So given that it's a good idea to keep some money in an S&P 500 index fund for your retirement, you have my blessing tomorrow morning to commit some capital. Some capital. Not all. The rest needs to be put to work in stages after we start getting battered by Omicron cases here in America if something really goes wrong. I'd say call out 1/4 of your money tomorrow, 1/4 the day Omicron hits our shores, and then the next half over the following few days. This is the kind of thinking, I think, for people with IRAs, 401ks. This is your chance if you haven't done it yet. How about if you're picking individual stocks? A little bit different. You don't want to go too deep into this market yet, but there are some things you can start buying here. Either dividend stocks, as CNBC Investing Club members know all too well because of today's bulletin, or tech stocks, which do well when the economy slows, whether it's caused by the Fed or by Omicron. That means Amazon down big, ServiceNow or Microsoft probably down because people think Salesforce is slowing, which it's not. I'm going to mention Tesla because people like me to mention Tesla. It is a tech stock. Don't need to buy more than that right now. I think you get more opportunities to buy stocks into weakness, keeping my powder dry for the rest, but are putting money to work. Putting money to work. In short, I am not sanguine. Okay, that would be foolish. I wish that Powell hadn't made these comments until the market finished processing the new variant. But I think the supply chain weaknesses from potential absentee workers who fear Omicron will create more inflationary worries. It's just what happened. We didn't think it would, but we've never seen anything. We've never seen anything like this. Now, so Powell's got the bases covered. Powell's gotten it over with. He said what he had to say about inflation and bond buying without committing to a series of lockstep rate hikes, as he foolishly did in 2018. It's almost cathartic. Why not commit more money tomorrow then? I still want to be conservative and be sensitive to the first Omicron casualty here. This sell-off is based both on COVID and on the Fed, probably in equal parts. Tomorrow the Fed won't say anything though, right? That damage is done. But while we're still in Omicron purgatory, so you need to keep your powder dry, because I think the market will have another leg down when we get a wave of sensationalistic stories about how the new strain has arrived at our shores. I'm trying to prevent that, as you see later in the show. Remember, we do have a strong economy. That's not bad. It's good. We've also got our best drug companies working hard to adapt their vaccines for the new variant. Also good. So the bottom line, it's too early to buy hand over fist, but too late to sell at this point. At a 9-1 down ratio, okay, you'd be selling into a classic fear trap. That's just not worth it. Buy it, don't sell it. On Mad Money tonight, Salesforce reported after the bell, and I'm getting to the heart of the quarter with the company's top brass. Then another investing club named PayPal has fallen from its highs, to say the least. Does it pay to invest here? Let's check with the CEO. And the Omicron variant continues to spread fear. So I'm going to go in one of the best doctors in the world, try to end fear. Go for rationality. Dr. Eric Topol. Stay with Cramer.